Hello, welcome to the next video. We will talk about the continuation examples. So let's just begin. As you can see, these black arrows, black lines are the 15-minute structures. So this is the 15-minute structure, and it's bullish, as you can see, creating series of higher highs and higher lows. The last low has been created, and after the demand zone has been formed because it broke structure to the upside here with inefficient movement. Let's say it swept some liquidity from this region. So we have a really valid demand zone right here. Okay, as you can see, the 1-minute structure is the red arrows, red lines. So the pullback started to form on the 1-minute, and it's bearish. We are expecting the tap of this valuable demand zone. And after the tap of this valuable demand zone, we can expect a change of character and the continuation of the whole bullish order flow, right? Okay, let's say you missed this first entry, price swept some liquidity into this demand zone. After the liquidity sweep, it changed character to the upside here and here also, and broke through several supply zones. For example, this supply zone, so many supply zones. Let's say you missed the change of character entry here and you couldn't enter in the position. So you did miss it. What can you do in this case? You couldn't enter here. You will want to wait for a continuation example, a continuation entry. And if price breaks structure to the upside after this downside movement and the first perfect entry, you can look for a scaling trade in the form of a continuation. So let's say price breaks structure to the upside again. As you can see, it broke structure here to the upside. So I will just mark it with BOS long. It also broke this supply zone here and didn't tap into this supply zone. So this means a new demand zone right here will be formed. So you have this demand zone right here. Okay. In this case, I wouldn't set an order limit on this line, on this demand zone, because it could be risky. It could be part of the liquidity. In a continuation entries, I recommend you to wait for a liquidity creation. So if price comes back down after the break of structure and, for example, creates this type of liquidity, double bottoms, and after it breaks structure, it doesn't have to break structure, it doesn't really matter, it just have to create liquidity. So let's say it created liquidity, triple bottoms. After this, you can easily set an order limit on this demand zone, because this is a really strong confirmation that the zone will hold the price after the liquidity sweep. So as you can see, we have this liquidity right here, triple bottoms, liquidity down, and after you saw this liquidity and the break of structure and the supply zone break, you will have a perfect continuation example. So the criteria is, you miss the first entry, you miss the change of character entry or the flip entry. After, you have to wait for a, I will just write it down here, break of structure / zone break. So this is the first criteria. The second criteria is the inefficient push. The third criteria is the liquidity. So you miss the entry here. The break of structure happened to the upside. The zone break happened, so double confirmation. It happened with an inefficient movement. Second confirmation, after it created liquidity just above the demand zone that broke structure. Third confirmation, third criteria. So you can easily set an order limit on this order block, on this demand zone. And it has a really great chance to mitigate the order block, sweep the liquidity, tap into this order block or demand zone. And after it, you can target the next unmitigated higher time frame supply zone, which is this one in this case. So yeah, this is the first continuation example. Let's see a live example for this one. So that's a live example. As you can see, price is moving in a bullish trend right here, creating series of higher highs and higher lows, building up liquidity. This was the last demand zone that created huge inefficient push to the upside, swept liquidity from this region, broke structure here, and has liquidity trend line just above it. So this is a really valuable demand zone. As you can see, price, after the high point has reached, it reversed and started to do a bearish trend on the 15-minute chart to mitigate this demand zone. After the mitigation of this demand zone, it changed character to the upside with this movement. So this is a 15-minute change of character on this line. And as you can see, this demand zone right here, I will just zoom in, this demand zone right here cause the change of character, the 15-minute change of character here. So this will be our 15-minute demand zone that we are looking for. And we are looking for a entry example, for example, a change of character, a flip, or a cancellation inside of this demand zone. Okay, let's switch to the 1 minute. No, sorry, one more thing. So the expectational order flow is bullish, right? Creating series of higher highs and higher lows, mitigating demand zones, changing characters to the upside, mitigating demand zones again. So the expectational order flow is bullish. We are waiting for some scenario like this. Okay, let's switch back to the 1 minute chart and take a closer look. As you can see, price changed character. Price was moving in a downtrend here, and price actually changed character here to the upside and started to form a range. Also liquidity here, swept that liquidity and actually changed character to the downside with this movement. So we can mark a valid supply zone out right here. This is a really valid supply zone because, as you can see, it has inefficient push to the downside, liquidity sweep, and change of character to the downside. Okay, so we are waiting for either a flip scenario or a change of character scenario. And if we can't enter on that flip or change of character scenario, we are waiting for a continuation example. Okay, let's see what happens. Price mitigated the supply zone, as you can see, supply took over control because price couldn't. Yes, price supply took over control from demand because, as you can see, price reacted on the supply zone and did reverse. So we had a strong rejection. Let's see what happens next. It's in the supply zone again, and the break of the supply zone happened, as you can see. And the break of the supply zone happened from this candle. Okay, let's just extend this and let's see what happens. As you can see, price continuously breaking structure to the upside with small, not so inefficient movements. So you could have just set an order limit on this demand zone on this order block, but this isn't the best case. This isn't the best option. So if you were insecure about it, you just want to skip on this trade and look for a continuation example. So let's see what happens. Price taps this zone, price feels the liquidity from this region with this candle, as you can see, mitigates the whole zone. And after this, it started to break structure to the upside. So you were insecure about this trade. You didn't want to really enter here. So you're looking for a continuation example right now. Okay, as you can see, price broke structure to the upside with inefficient movement with these two inefficient candles here. It also swept some liquidity from this region. So a really valid demand zone has been created right here. This whole candle is about demand zone. Okay, let's see what happens next. So two criteria of the three are fit because we have inefficient push and break of structure to the upside and some liquidity sweep. Right now, we are waiting for a liquidity creation. It really has to create liquidity. And as you can see, it slightly created some liquidity right here. Small liquidity trend line. We are waiting for more liquidity. And as you can see, price is creating perfect liquidity for this zone. In this region, we have loads of liquidity, loads of orders, loads of stop losses sitting just below this line and also just below this line. So it makes this demand zone valid. Okay. In this case, I can set an order limit on this zone and I can wait the tap of it. But actually, I believe the 2-point pip stop loss won't be enough. Yes, we will talk about the equilibrium entries in the next unit. So yeah, we did set an equilibrium entry right here. We will talk about that in the next unit. Let's see what happens next. As you can see, price is breaking structure to the upside with inefficient movements continuously, but the order is still here. We keep this order here because we have a bunch of liquidity just below this, just above this zone, and we are expecting the tap of this zone. Okay, as you can see, price reacted on this demand zone right here. And after it broke structure to the upside here again with inefficient push. Let's see what happens next. But you actually can't open a position on this demand zone. As you can see, price formed this demand zone here. But this demand zone is part of the liquidity. Can you see how many equal bottoms are here? So you can't really open a position on this demand zone. You will want to wait for a liquidity sweep. And which zone will hold the liquidity sweep? more likely this down zone, because this zone has liquidity here, liquidity here, liquidity here. So loads of liquidity. So we are still waiting the sweep of this liquidity and the tap of this zone. And if price taps this zone and tags us in, that will be the continuation example, because he missed the first entry here, couldn't enter here. And this is the next break of structure after the missed entry. Okay, so let's see what happens. Price is breaking structure to the upside. It's on the way back down to mitigate the zone. As you can see, it built up more liquidity here. Mitigated the zone, reversal. And it's on the way down to, yes, it swept this liquidity. Right now we have this liquidity left. Let's see what happens. I will just extend this line. Sorry. So yes, and I will just set my target for the next unmitigated 15-minute supply zone, which could be this one. The wick, I could use the wick. So this could be this one. And it would have been 1 to 10 risk reward ratio. Okay, that's a really good target. Let's see what happens. So as you can see, price is building up more liquidity in this region. So we have loads of liquidity, loads of stop losses sitting just below this line. And which zone will hold that liquidity sweep? This zone, right? Okay, let's see what happens next. As you can see, price perfectly swept that liquidity, tagged us in. Okay, mitigated the 50% of the whole order block. We will talk about the equilibrium entries in the next video. Don't worry. So mitigated the order block. And after it started to break structure continuously to the upside, change of character here, break of structure. And let's just play price forward. Let's see what happens. Just extend these zones. So just play price forward. As you can see, it's moving really, really nicely, breaking structures to the upside continuously, creating the efficient movements, broke the last structural weak high. This is a weak high because it couldn't break below the last strong high. So as you can see, this is strong high because it broke the last weak high. Weak high couldn't break below the last strong low. So this is weak high. Price broke through this weak high, created another strong low. Okay, let's play price forward again. Let's see what happens. Okay, and TP hit. Perfect TP hit, as you can see. And this is the continuation example. So you missed the first trade right here. You couldn't enter on this opportunity because you are lack of confidence, or you're just insecure about the trade. So you are looking for a re-enter, the next opportunity. This demand zone gives us the perfect three criteria: inefficient push, break of structure, liquidity creation, liquidity sweep. So we can set an order limit on this demand zone after all of the criteria has happened. 50% entry, bam, tagged us into the trade. Target is the next unmitigated supply zone, bam, TP hit, it's all over. So yeah, meet you in the next video.